Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here with top stock picks at Zacks. Today I'm looking at AppLovin Corporation, which trades in the ticker APP. AppLovin designs tools to help app developers improve marketing, revenue generation, and other critical aspects of their businesses to help them drive profitable near-term and long-term expansion. The firm plays a key role in the wider app ecosystem with end-to-end software solutions that aim to optimize monetization through various products and solutions. AppLovin's gaining steam recently through new advancements in machine learning and AI-focused offerings. Plus, the stock has skyrocketed roughly 270% in 2023 to crush the likes of NVIDIA and other high flyers. Looking ahead, AppLovin's CEO believes that its new AI-focused features will improve nearly every aspect of the business, including its ability to help clients gain exposure in the booming connected TV space and beyond. And its enhanced offerings are already leading to better return on investments for their customers, which should lead to further expansion, greater market share, and stability down the road for AppLovin itself. So now let's dig into some other estimates and fundamentals. We're going to go over to Zacks.com and our ZRS system to do some of that. So at first, I'll go over to AppLovin on Zacks.com so we can see that it's a Zacks rank number one strong buy here with an A grade for growth and a B for momentum. And we're going to go to our detailed estimates here for earnings. And we can see that its bottom line is expected to expand by 333% this year from 18 cents per share all the way up to 78 cents per share, and then climb another nearly 72% next year, all the way up to $1.33 per share. So some big time growth there we're calling for on the bottom line. And then we can see that after it crushed our estimates last quarter by 175%, it boosted its outlook in a big way. So we can see it went from 35 cents per share all the way up to 78 cents per share with some recent positivity as well after that big post-earnings release jump. And then on the 2024 outlook, also huge jumps from 60 cents all the way up to $1.33 per share, and then big jumps as well right after that initial post-release positivity. And then we can see our most accurate estimates for AppLovin are coming in even better as well. So our most recent / most accurate estimate for 2023 is coming in about 5% above current consensus. And then for next year, we're coming in 41% above current consensus. So $1.88 per share is the most accurate estimate. So that's really nice to see. And then on the top line, we're calling for about 10% growth this year to about 3.1 billion, and then another nearly 13% growth next year to about 3.5 billion. So that's a great sign to see as well. And now we'll go over back to that ZRS system, and we can see that AppLovin's trading at about 1.6 in terms of its PEG ratio, which factors in that longer term earnings growth. And that marks a solid discount to the wider Zacks tech sector, which is at about 1.9 in terms of that PEG ratio. Now we'll go over and take a look at some of its wider performance. So if we go back, the stock went public in the early part of, the first half of 2021. It's down overall since it went public, and it went public at a time when tech stocks were going up. So it kind of topped out when the NASDAQ topped out in November of 2021, and then it went on a big decline. But it's now trending back heavily in the right direction, as we mentioned. So year to date, it's up 270%, blows away a lot of other big high flyers. And then we'll look at the technical outlook at the moment as well. And the stock has been trending higher and higher above that 50-day moving average. And we can see that it dipped below there recently, but it's finding support around that level, which is a good sign to see that 50-day moving average holding. And then we'll go back over to Zacks.com to take a look, and we can see that there's still solid upside for the stock. So it's trading still 10% below its current average Zacks price target, which is also a good sign. And then on top of that, 11 of the 16 brokerage recommendations that we have are coming in at strong buys, with 4 more at a hold and only 1 at that strong sell at the moment. So overall, that's a quick look at AppLovin. And sort of the closing thoughts on AppLovin is that its portfolio of products and solutions are really vital in the highly competitive world of digital apps, where countless companies are competing for awareness and screen time and profitable success in our really smartphone obsessed world. So it does appear that it's a solid look at the moment. So you don't necessarily buy it right off of my recommendation, but certainly worth looking into App 11. So that does it for me on this part of top stock picks. And now I'm going to send it over to Dave Bartosiak.
All right, Ben. Well, thanks for that pick. I've got another one here. It is Zacks rank #1 strong buy Camtech, ticker CAMT. And if you're a blockchain innovators subscriber, I'm sure you've seen this one before. Taking a look at Zacks.com, let's see why I like it. So, of course, Zacks rank #1 strong buy, loving that. It's in the electronics measuring instruments industry, which ranks in the top 9% of our Zacks industry rank. So this company is involved in the manufacturing of semiconductors, sort of quality control along the way. Something that jumps out here is the year-over-year revenue growth was negative this year, but a return to some big-time profitability next year, 15% revenue growth there. I guess that's a little bit of a misnomer there, saying that it's a return to profitability because they've been profitable the whole time, but just more profits. This year, EPS growth was there was no growth. There was a contraction of 1%. Next year, we're back to 20% growth on the EPS side. So some of this is sort of a function of what we saw with the supply chain shock, and then a bunch of orders coming in, and then now this is sort of a return to normalcy like we're seeing in many parts of the economy. Over the course of the last 60 days alone, you have two analysts up in the ante for the current year and for next year. Take a look at our Zacks consensus estimate. We've gone from $1.71 to $1.86 for the current year, $1.92 to $2.24 for next year. Everything moving in the right direction. Now let's take a look at my favorite chart. It is the price consensus and EPS surprise chart on Zacks.com. You can glean so much information from this one chart. The multicolored lines represent the evolution of our Zacks consensus estimates. The green arrows are earnings beats. The red arrows, there's one in here somewhere, right there, earnings misses. So you see the last miss back in May of 2020, the move higher in estimates, and now you really have this growth year over year that's being baked in, and that's helped catapult this stock up over to the $60 mark, while these estimates still continue to come in huge. So you get growth, you get under promise, over delivering, exact sort of thing that you want to see in a chart. That's why I have Camtech as my top stock pick of the week. So be sure to check out Zacks.com/promo for this week's deal on our Technology Innovators portfolio ran by Brian Bolin. Be sure to check that out, and be sure to come back and check us out next week for our top stock picks video of the week. For Ben Rains and I and everybody else here at Zacks.com, I want to say thanks for watching, and we'll see you